Conference will reconvene, and the Senate chairman is recognized to conduct some Senate business.
Well, Mr. Chairman, I want to recognize Senator Shelby. We had sent to you a funding proposal for the SEC. We're going to send you an alternative proposal that I think has probably more broad-based support. And I'm going to ask Senator Shelby to introduce explain the amendment on behalf of those of us who are sponsoring this particular effort. Senator Shelby.
Thank you, Mr. Chairman. Mr. Chairman, I believe the amendment's been distributed over here. Mr. Chairman, I offer this amendment on behalf of myself, Senator Dodd, and Senator Reid, and it's, of course, to provide funding stability for the Securities and Exchange Commission. The conference-based text would have removed the SEC from the appropriations process, period. While more money and greater flexibility for the SEC are appropriate, I believe congressional oversight of the budget of an agency that has exhibited severe managerial and operational failures is critically important. Madoff, Stanford, Bear Stearns, and Lehman may make a compelling case that the SEC needs more resources, but they also make a compelling case that the SEC ought not to go unmonitored. Mr. Chairman, the conference-based text would provide the SEC more resources, but would also greatly reduce its accountability to Congress. In the wake of some of the largest failures in the SEC's history, I believe it's surprising that Congress would decide to make the SEC less accountable, not more accountable. Mr. Chairman, additional resources are warranted for the SEC's important responsibilities, but I believe they should be accompanied by a responsibility to account to Congress for how those resources are spent.
Right.
This amendment would authorize significant appropriations increases for the SEC and enable the SEC to set up a $100 million reserve fund, too. The SEC would access the fund as needed, but would have to report its expenditures to Congress. The SEC's budget would still be subject to appropriation in a sense. This approach ensures that the SEC has the funding that it needs to improve its performance that we all want, while still making sure that the SEC can be held accountable. Under the amendment before us, the SEC could make its budget submissions directly to Congress without prior approval by the White House. Most importantly, the amendment would enable the SEC to build up funds that it can use to undertake large-scale capital or system improvement projects or access during times of crisis. Mr. Chairman, I urge my colleagues to support this amendment that would enable the SEC to make the changes to its enforcement, inspection, and rulemaking programs that recent events have shown to be necessary, but still would allow Congress to oversee and assess the SEC's actions.
Senator Reid.
Mr. Chairman, I want to commend the senator from Alabama and yourself for bringing forth this amendment. I would prefer self-funding. That is the usual mode of funding for these financial regulatory agencies like the OCC and the FDIC. But if we cannot move to that level, then this proposal does have, I think, strong and compelling points. First, as the senator from Alabama mentioned, it would provide budget bypass authority so that the SEC would submit their budget to the Appropriations Committee in Congress at the same time they would to OMB in the Executive Office. That would allow us to see an unvarnished request for the resources they need. And the second major point was the creation of a fund up to $100 million a year for technology needs and other capital investment. Just as a comparison, most of the investment banks, large banks that they are expected to keep up with, are investing probably 10 times that much each year on new technology, new systems. And in many respects, you're asking an agency to, try to run down a fast sports car with an old car like I have, a 1991 Ford. They can't catch them. But this will help greatly, I believe. So I would commend the senator and urge adoption.
Is there further debate or discussion on the Shelby amendment? If not, all those in favor say aye.
Aye.
Aye. Those opposed, no. The ayes appear to have it. The ayes have it. And we'll submit that proposal to our House. All right. I'm told that my colleague from Arkansas, the chairman of the Ag Committee, is on her way over to offer a counterpart proposal which for the CFTC, seeking a similar treatment for that agency. So that is, yeah. Now, I think, Jack, there's going to be a proposal on Gustafson, to strike Gustafson. I don't know who's going to offer that. Judd, are you offering that, or is Richard Shelby? Senator Shelby, you recognize?
Thank you, Mr. Chairman. Mr. Chairman, I would move to strike a last-minute addition. I have the amendment here, and I hope you do. A last-minute addition to the Senate counteroffer on the investor protection provisions of Title IX, which would overturn a Supreme Court case, Gustafson versus Lloyd. I have serious concerns about reversing the Supreme Court without deliberation. Mr. Chairman, the legislative language would amend the definition of prospectus to include private offering materials. The effect of this change is strict liability for issuers and underwriters in private placements. Issuers and underwriters already are subject to anti-fraud liability. Unemployment in this country is around 10%. Entrepreneurs are unable to raise money they need to fund their businesses. Why would we take a step like this at a time like this, which would only make it harder and more expensive for small businesses to raise money? For these reasons, I move to strike the addition in the Senate counteroffer and instead consider the issue through our normal deliberative process.
We'll work on it. Senator Reid?
Mr. Chairman, the Senator from Alabama is correct that the case in 1995 in the Supreme Court, Gustafson, did change what for 60 years was the existing rule that the seller in a private or public offering, not investment bankers, but the seller, not the underwriter, but the seller, is liable under the 1933 Securities Act for misstatements. It is not a strict liability standard. It is a standard of negligence. That standard has further been amended by the passage after the case in late 1995 of the Securities Reform Act of 1995, in which also the seller could allege that the loss in value was caused not by the misstatement but by other factors external to his offering material. This issue is, I think, very important. We have seen in the context of many private placements, particularly with collateralized debt obligations, serious inaccuracies and materially, in some cases, misleading. Senator Levin, Senator Coburn, and Senator Kaufman are particularly engaged on this issue. Their hearings, which they held with regard to the Goldman Sachs mezzanine offerings of CDOs, revealed a situation in which this type of remedy under the 33 Act, directed only at the seller, not at other third parties, would be entirely appropriate. One of the interesting things about this decision is that, to me, the most compelling comments were made in the dissent, and a dissent that was authored by Judge Thomas, joined in by Judge Scalia and Judge Ginsburg and also Judge Breyer. Seldom do they agree, I think, on many things. They agreed that the reading of the majority was wrong, that clearly within the 33 Act, liability was not dependent upon whether it was a private offering or a public offering. The legislation that we've incorporated in the underlying bill would maintain the rule that existed for 60 years, that regardless of a private or public offering, Section 12.2 of the 33 Act gives a right, a cause of action against the seller if a material omission or misstatement to the buyer is made through a prospectus or oral communication. I think we have to maintain that standard, and I hope we can, and I hope we can reject the gentleman's amendment.
Senator Shelby.
I'll be brief, Mr. Chairman. Reversing the Gustafson decision would hurt small businesses and entrepreneurs by exposing them to unjustified lawsuits. And reversing the Gustafson decision would lower the liability standard by which investors in private securities transactions could sue companies for misstatements in offering documents. If Gustafson is reversed by the legislation, it would substantially increase the cost of financing for small businesses. They will have to spend more money on lawyers and accountants to protect themselves from lawsuits. This means less money for investing and creating new jobs. It will also increase the time it takes to do securities offers for small business in the U.S. and will undermine our basic economic thing. I urge adoption of the amendment.
Further discussion, debate on this? Senator Reid?
Mr. Chairman, I just don't think that's an accurate characterization. Most small businesses actually get their capital by going to banks and borrowing it. If there is an offering, the offering is usually made by some type of offering document, so there's no requirement for a new prospectus. And I would assume most small businessmen and women who are buying equity in a deal like this or getting the resources of that deal would assume that the offering statement is factually correct, that the individual seller has checked the facts, that they're not materially misleading. That assumption is going to be undermined if we don't allow a cause of action. And mostly the people would sue would be the small business people or the people who have been frustrated by the sellers of these securities. So I would hope we would
Yeah. Well, Mr. Just very briefly, look, this is one of those calls where I think you can make a meritorious case on either side of this one, in my view. I mean, private offerings are distinct from public offerings, and there are some costs associated with it. So there's almost be I find myself sort of agnostic on this, but nonetheless, why don't we just, I think we have unless my colleagues want to heard more on this thing, I'll vote, call the roll. Clerk will call the roll on the Shelby amendment.
Mr. Chairman.
Aye.
Mr. Sherman, aye. Mr. Johnson.
No.
Mr. Johnson, no. Mr. Reid.
No.
Mr. Reid, no. Mr. Schumer. Mr. Schumer, aye. Ms. Lincoln. Ms. Lincoln, no. Mr. Leahy.
No. No by proxy.
Mr. Leahy, no by proxy. Mr. Harkin.
No by proxy.
Mr. Harkin, no by proxy. Mr. Shelby.
Aye.
Mr. Shelby, aye. Mr. Crapo. Mr. Crapo, aye. Mr. Corker. Mr. Corker, aye. Mr. Gregg. Mr. Gregg, aye. Mr. Chambliss. Mr. Chambliss, aye. The vote are 7 aye, 6 nay. The measure's passed.
Thank the clerk. I don't know, my colleague from Arkansas, I mentioned earlier, maybe I misspoke,
7-6.
that you might have an amendment on a funding.
You're right.
for-
Mr. Chairman, I had a parliamentary inquiry about you. Don't you have 12 conferees? How'd you vote 7-6?
I apologize. The vote is 7 aye, 5 nay. The measure is passed.
I was going to see if I could do that.
Once again, our colleague from Massachusetts saves the day for
I
the
got
Senate
nothing to
here.
do
I
with
think.
sit here.
I thank the chairman of the conference for being so diligent. Senator Lincoln.
I don't think I have all the copies just yet to hand out, but I've got my amendment ready. And the amendment is simply mirrors what you just did for the SEC in terms of making sure that the self-funding is there. It provides a transaction fee. The fees go to the account at the Treasury, just like it does with the FEC, and the appropriators actually appropriate those, determine and appropriate those dollars, and the commission sets the fees, just like it does in the same. It just mirrors exactly what you've done there to ensure that there is equity in terms of making sure that there's resources there to run both of these agencies. We have worked with the appropriators as you requested us to do, and we have come up with basically the same thing that you have for the SEC.
Is there a further debate on the Lincoln amendment?
Yeah, Mr. Chairman.
Senator.
Wait a second.
Senator Dirksen.
We have an offer.
Senator Chambliss.
Mr. Chairman, obviously we've just seen this amendment, but during the debate on the floor, we had extensive conversation about what we're doing in this underlying bill with respect to domestic trading versus trading offshore. By raising the cost of doing business, we're inviting all of those companies who were not part of the problem that caused our financial crisis to immediately move their trading offshore. And now what we're doing is, in essence, we're adding a tax to everybody that trades on American exchanges that they don't pay today. So it's simply one more reason, as if they needed one more, to move their business offshore. So I think this is a bad sign to the business community.
That's right.
I think it's one more indication that it's going to be very, very expensive to trade on U.S. exchanges, and I would be opposed to the amendment and would urge my colleagues to vote no.
Mr. Chairman?
As much money as we're spending now, if we can't find some money to fund the CFTC, then we ought not be passing this bill.
Mr. Chairman?
Senator Lincoln.
I would just respectfully say to my colleague that as we move forward in this bill, we're adding a tremendous amount of certainly added responsibility to the CFTC. Right now, if you look at the funding levels, is tremendous disparity. And I think that in this economic environment, particularly with swaps that are not traded on an exchange, but to simply ask for a small initial fee is simply adequate to make sure that the appropriate regulatory measures are taken and the oversight is there to ensure that it's a good, sound market and it's productive for consumers as well as investors. And I think this does the trick just like it does with the SEC.
Senator Schumer?
Mr. Chairman.
Senator Schumer.
Yeah, Mr. Chairman, Senator Lincoln and I have talked about this, and we said CFTC and SEC should be on comparable basis.
Right.
I don't believe this amendment does that, so I just ask that we look and compare it and make it comparable.
Well, fine. Why don't I suggest that we're going to have, why don't we defer this for a few minutes?
Sure.
Okay.
Glad to.
All right. I still do this? I'm going to send to our House colleagues, going to ask that we vote to send the Senate counteroffers on Title 9, Subtitle J, on SEC funding, and Subtitle B as amended by the Shelby Amendment to the House. All those in favor of doing so say aye. Those opposed, no. The ayes appear to have it. The ayes have it. We submit to the House those two outstanding, I think, subsections of Title 9 as amended by the SEC funding proposal and the Shelby amendment as amended. Is there further?
Give me a minute here to gather the staff.
Yes, we have.
Lance. Am I reading this right, that this is to be offset against any appropriated funds that go to the CFTC?
The House.
They're going to give an appropriated amount. Well, this says it's going to be
The Senate has sent us a self-funding mechanism of funding of the SEC.
Correct.
And it accompanies by the Shelby Amendment that strikes the Gustafson proposal that was in the Senate bill. we are inclined to agree to, we're going to agree to both those. But before that, I'm going to recognize the gentleman from Pennsylvania because of an inadvertent reading of something which he will explain, but we believe would put Americans at a disadvantage in trying to get justice in some foreign situations. So I now move that we accept the Senate offer, and I recognize the gentleman of Pennsylvania to make an amendment to that acceptance.
Mr. Chairman, I offer an amendment. And
Clerk will designate the amendment.
Amendment to the additional proposed amendment.
I ask unanimous consent the amendment be considered as read, and the gentleman is recognized.
Mr. Chairman, this amendment will allow American investors and foreign investors who suffer market losses as a result of a fraudulent scheme perpetuated in the United States by a company incorporated overseas to pursue claims in courts in the United States to recover their losses. For nearly 4 decades, most federal courts have permitted securities fraud claims to proceed in the U.S. on behalf of foreign investors or against foreign defendants, provided that significant conduct occurred in the United States that was material to the fraud success. Recently, however, some federal courts have dismissed many of these lawsuits. The Parks versus Fairfax Financial Holdings Limited in the Southern District of New York on March 29, 2010, the court dismissed the securities fraud claims based on the fact of jurisdiction. In Re European Aeronautic Defense and Space Company, Southern District, New York, March 26, 2010, the court dismissed securities fraud claims of American investors against foreign defendants, notwithstanding the misrepresentations disseminated in the United States. In Copeland versus Fortis, Southern District, New York, February 18, 2010, the court dismissed securities fraud claims of American and foreign investors against a foreign defendant, notwithstanding misrepresentations disseminated in the United States. At this conference, we have already codified the Securities and Exchange Commission's authority to bring civil law enforcement proceedings involving transnational securities frauds by amending certain securities laws so that courts have jurisdiction in such cases. This amendment will merely extend that right to defrauded investors. The lower courts continue to grapple with this vexing issue because of a lack of congressional guidance. It is past time that we clarify the reach of our securities law by adopting this amendment. I may say that it has particularly came to my attention from the governor of Pennsylvania just a few days ago that the Pennsylvania Pension Fund has what they consider a very firm case to bring against Toyota for the loss of tens of millions of dollars, but they fear as a result of the precedent cited here that they will not have jurisdictional standing in a federal district court. What this amendment requests is that we allow a pension fund or other institutional investor who have been so wronged where there is just no clear statement of jurisdiction to at least have that jurisdiction to proceed these actions. To just one single pension fund, like the Pennsylvania Pension Fund, we're talking of tens of millions of dollars. How that impacts across the country, no one will know it until we study that question later on.
Is there further debate on the amendment? If not, the question is on the Kanjorski amendment. All those in favor will say aye. Aye. Opposed, no. The ayes have it. The amendment is agreed to. The question now is on sending to the Senate an offer which includes the Kanjorski amendment and acceptance of the Senate position on SEC funding and the Shelby amendment that degustifinizes the bill. All those in favor will say aye. Aye. Opposed, no. The ayes have it. It's sent over. Senator, if I have the Senate's attention and others, I just want to raise an issue that we may be dealing with a little bit later. Senator Harkin offered an amendment on the SEC annuities issue, SEC versus insurance. Members debated on the merits and it passed in both houses. To our surprise, we were then told by CBO that it would cost $980 million. Now, members might still think they want to do that, but particularly in the House, we have a pay-for requirement, a pay-go requirement. So I just raised that, Senator. Maybe some of those were advocates. I was not an advocate of it, so it's sort of easy for me to say, but I don't know whether those who supported it would want any kind of reconsideration now that CBO has tagged us for $1 billion. I would note this. What the amendment said was that the SEC could not go forward with a proposal. Some of us had, including myself who voted against the amendment, written to the SEC and asked them to withhold. And one option might be for a group of us to write to the SEC and say, please don't do anything until we can have some hearings, et cetera. But, again, I don't know what members want to do. But at this point, if that vote stands, we have $1 billion, almost $1 billion to add and to pay for. And I'm not asking for a response now. I thought I was mentioned. Gentleman from Alabama.
Mr. Chairman.
Mr. Chairman, if we could, do we have a CBO paper on there?
Well, CBO said 980. That's CBO's number.
I mean, is there something in writing that we could look at?
Yes,
I mean,
we will get it in writing from CBO.
And I don't know whether this just means that there'll be a loss of revenue because people will change their investment.
That's a reasonable point. I would ask that we have the CBO estimate. When we get it, will be circulated fairly soon, and then we can respond to it. It's a reasonable request. Thank you, Senator. Yes.
And I just say to we'll take a look at the Konjorsky amendment that you've sent over to us. As I would understand it, though, assuming something may have worked out on that would close Title IX. Is that correct?
Is that true?
That closes out.
That's correct, but I would recommend that we hold Title IX open pending what we get from CBO.
That's correct. I agree with that as well. Okay. We'll hold up before we respond.
I'm told even when we've concluded this, subtitle D is still open on Title IX. Which is D? Oh, that's risk retention. So one subtitle would still be open in any case. That's the risk retention. Yeah. And proxy access is in that same one. Is it the same one?
It's in Title IX. It's a different section.
No, there are a couple of issues left in 9. A couple on risk retention and proxy access.
That's the.
Are we ready to go in further?
This is the transaction fees.
What?
We have nothing left to do, right? Are we ready with it? We're ready on risk retention. Senator, I think we're ready to send you back our responses on the risk retention, subtitle D. I'm about to get it.
Right. They're going to get what they want.
Has it been distributed?
It's being distributed now.
All right. The proposal is being distributed. Well, this doesn't, this just says amend how.
And then on the back here, this is how it is.
All right, next on the summary, though.
Okay, that's why
And I'm now going to move the counter offer, and here's what it does. First, on the well, let me hold on for a second. What does it do?
commercial mortgage-backed securities, it gives the regulators the discretion to set when commercial mortgage.
Revises it.
It just adds, it revises their exemption to be consistent with the House bill, and here, this just adds.
What does that mean?
It just basically gives gives an exemption to the Farm Credit, the Farmer Mac, and the Farm Credit Administration for risk retention.
That Farmer Mac.
Yes, that's
It doesn't revise.
it just replaces the House language with the Senate language at the request of the Agricultural Committee. And this just adds FHA.
Still one of your waters there.
All right, here's what we do first. The Agriculture Committee had asked us to accept the Senate language on the exemptions for Farmer Mac in this in the risk retention writing. It does say, with regard to the regulators, this is, I think, relevant to the land rule amendment, it says that the regulators may designate qualified mortgages that would qualify for zero risk retention, but they could not go beyond what the House and Senate, what the legislation would say. That is, they could not exempt mortgages that were not as tight as the ones that we put. We put some minimum requirements in there. The exemptions in the commercial mortgage-backed securities, let me... Yes, it gives the regulators, again, it directs the regulators here to provide exemptions from the risk retention for commercial mortgage-backed securities, but given their volatility, does give the regulators the power to do that in a way that ensures security. And it adds at the request of the Federal Housing Finance Agency, one of the groups to write the rules on risk retention. So that's our offer. Is there further discussion, gentlemen from New Jersey?
Yeah. First, a clarification as we're just getting all this here. So in the offer that you're going to have at this point in time, does the language that we had in the base, which was the original language on the that we had before in covered bonds, was that going to be reestablished, or do I need to?
No, that's not affected. The rule is the covered bonds issue isn't affected here one way or the other. I don't know how it would be.
So is it still in?
This is additive to what we've already done. This doesn't replace the whole thing.
Well,
excuse me. Give me the answer.
Well, did
well,
Chairman Dodd, did covered bonds go over in our offer?
that was my understanding.
No, it did not.
It came from y'all, and
Right.
it didn't come back from us.
Right. I'm sorry.
We rejected that without prejudice, you may recall. And
Well,
we were working on it or seeing if there was something, so I don't have an answer for you, and I'll check with staff. But I can say to the chairman of the House Committee that we haven't done that yet, but on subtitle D of Title IX, we accept the House's offer on the risk retention.
But that's where we're in.
But you didn't send us back on the.
Is this counter offer?
Nothing's gone back at all. That's where we are now.
Yeah.
And so that's what I'm making the clarification to make sure that what we send back is what we had originally.
Is that all?
But it isn't.
That's part of D.
It doesn't. Your offer back to us, as I understand it, does not have covered bonds in it.
Well, that's what I'm trying to make sure that it does.
Yeah, but I think the offer's already been sent over here.
Yeah,
So the offer's here. We have to deal with it.
Yes, Mr. Chairman, that's right. As I understand it, we sent it over.
Yeah.
I'm told that the Senate initially rejected without prejudice pending some discussion, but took no dispositive action. So as far as we're concerned, covered bonds is still part of an offer to the Senate to which we have not had a formal response.
Okay. So when they say, so when you say,
So I'm responding just to what was sent over to us, because there's no way they'd send covered bonds. You've already sent that to us, and with everything else going on, we haven't paid a lot.
Yeah,
of
this is a response to those things. It does not affect covered bonds. We accepted. We sent it to the Senate. We are awaiting Senate's response.
Mr. Chairman, it's my understanding that the Senate is waiting from some clarification from the Treasury or
Godot.
Well, I don't know.
or the SEC or such.
yeah, we're working on all that stuff. So yeah.
Well, then would you?
We'll get back to you with an offer.
Well,
So let me go back again to where we were a few minutes ago. We sent the covered bonds to the Senate. They haven't sent it back. It is not affected by this.
Thanks.
And we're responding to what you have sent us here on subtitle D by accepting the House's suggestions.
That we just discussed. But before you accept them, I need to have them accepted here. All those in favor, because I was putting the vote when I was asked about covered bonds. And all those in favor of submitting the House offer to the Senate, please say aye. Aye. Opposed, no. Senator, we now submit the offer. And we graciously accept the offer is yours, and it's been accepted.
And we're sending it.
And that's then all closed up.
Back to you. And let me tell Senator Congressman Garrett, who's interested, and I know my own colleagues there on the covered bonds issue, I think our language, given the complexity, there's probably going to be a study on this issue from us. I say that to the congressman. I don't have anything formal to offer you yet, but I think that's where we're headed on that one.
To where? I'm sorry.
A study on the covered bonds issue. I know you want to hear more than that, but frankly, that's...
Well, I thought your comment yesterday was that there were some technical areas that needed to be addressed, and that's what we've been working with the OCC, the SEC, the Fed, hearing from all those folks, basically getting that. So I thought that's where we were.
They're still very much opposed to it.
Well, they're not. The SEC has not said that they're opposed, or the Fed has not said that they're opposed, or the OCC has not said that they're opposed. No.
Treasury.
Yeah.
Is that Senator?
Treasury.
Treasury, we met here.
Let me take a look. We'll take a look.
Thank you.
If I could, since I won't belabor it, but the study is worse than not addressing it at all, because the study says it'll be addressed in 2 years. I know there are other issues that we've all talked about that we need to address right after this, and to me, all we'd be doing, we'd be actually hurting ourselves to accept the study language. So I hope we'll find another solution, like just doing covered bonds like we've been talking about for 8 or 9 months.
As you know, the Treasury is strongly opposed to it. I mean,
well, they're opposed to a whole bunch of other things in here, 716 and otherwise. So maybe we can agree that they can be disagreeable to a couple points. And
this is not religion to me. I mean, the fact that Treasury is opposed to it doesn't necessarily kill your proposal. I mean,
glad to hear that.
Mentioning what we're dealing with out there.
Yeah, appreciate that.
Yeah, well, the problem was, the last night I was sitting, I guess he's talking to Colin, but the new Dam Center meeting, my sense is they're not as far apart substantively as they are just with all the egos and everything, but we just needed Colin Peterson and the new Dems to get in the same room with Treasury, so I got a Democratic position. I'm saying he's now trying to...
Chairman.
But if I get a general Democratic position, then I can...
Mr. Chairman.
I can offer it.
Isn't the SEC, the FDIC, the OCC, the Fed, and the Treasury opposed to Section 716?
It'd be the last to try and speak for all of those agencies at once. I know they've expressed some reservations about...
No, I was just wondering the standard we were using, because if covered bonds gets knocked out because the Treasury's against it, then shouldn't 716 get knocked out because it's got 4 agencies against it?
Well, as I said, it's not religion to me when they express their opposition. I suspect that I might get a question from my...
It was a rhetorical question.
They don't speak ex cathedra, as we say.
Tell them that. Give them that as something that's substantive. But I don't have a common Democratic position, and I've been so busy with the rest of the comments, I haven't got a chance to try and put it together.
Well, distribute them. Be recognized.
I got a couple of hours. I will not.
Well, he'll distribute it while you're talking.
This is on proxy access. Our original Senate legislation basically gave the SEC the authority to set proxy access rules. There was some significant pushback from our side. Senator Dodd offered 5 years with a 2-year hold. That was not acceptable to a good number of people, including
5%.
5%. Is that what I said? Sorry, 5% with 2-year hold, 5% aggregate, before you'd get proxy access. That seemed to me and some others to be too far beyond the reach. You have to have a balance here. You don't want every single person to be able to do proxy access. Some outlier who has a total issue. On the other hand, you want some real oversight over boards. I've always argued when there's no federal money involved, when it comes to pay, the origins of this came about with say on pay, and you said the shareholders ought to have some say, but the shareholders wouldn't have much say if they didn't have access to the shareholders, and so you had to come up with some kind of reasonable limitation. We've talked to the SEC, we've talked to the investor community, and there's not a complete consensus, but a rather broad consensus that the following offer we would make would be acceptable to them, which is 3 years, a 3-year hold 3%, you'd have to have an aggregate, not an individual, but an aggregate of 3% of the outstanding shares, and then adding a tail, which means if the proxy offer succeeded in changing the board, those who voted for it would have to hold the stock for a period of time. That's a rather novel suggestion by the investor community and some others, but I thought it, but after we checked it out, even the SEC thought that was a good idea. 1 year or 2 year tail? What are we proposing? We're proposing a 2-year tail, which means that if you voted for it, you got to hold the stock for 2 years.
And hold it.
That purpose being, you wanted new management? Fine, stick with them. Don't just kick the old management out, put in someone you don't care about, and flip it. And I would say that some of us would like to go further. I understand that. Some of us don't want proxy access at all. But I think this is sort of a pretty fair compromise that says, hey, when you have a significant number of shareholders who are upset, they should be able to present their grievance.
Would the senator yield for a question?
Be happy to
on
yield.
how his, or if you're going to have this tail, which I don't know whether it's a good idea or not, but it's an interesting idea. I'm presuming that this 3% threshold can't be met with borrowed shares.
Correct.
So is that part of the?
That's part of the base legislation. Yes.
That it can't be borrowed shares.
Can't be borrowed. It's only the owner.
That's
very
constructive.
Who can be part of the 3%. Otherwise, people would just lend their shares for a vote, take it back, and it would be the 3% could
right.
be. Yeah.
So I think it's an excellent element of
the senator
proposal.
Respond to another question?
Yes, please.
This may or may not be in your amendment, and so maybe someone else might have to answer this, but there's been some discussion as to whether the word shall has been changed to may in our negotiations here.
Okay.
Do you know what?
I will just tell you, and this may answer it, may not, depending on which shall or which may you mean. This would be a minimum of 3%, minimum of a maximum of a 3-year hold, a minimum of a 3-year hold.
Does the amendment mandate that the SEC do this, or simply authorize the SEC to do this?
Excuse me, it's a may.
It's a may. All right, thank you.
May. But I've talked to the SEC about, obviously the board hasn't voted, but I've talked to the chair and others about what direction they're headed in, and this is not out of the ballpark for what they would actually implement. Even if we had just language letting them implement whatever they wanted, it would end up about here.
Max, you said you can't sell it. Well, what if you
Been distributed. I think it has. Has it been distributed?
No.
In the process.
Give my colleagues a chance to look at the menu, the amendment.
Mr. Chairman, if I could inquire, I think this is an amendment to the base proxy language.
Right. The
And
base proxy
what might be helpful is to outline what the base proxy language
The base proxy language simply enshrines what the SEC does. In other words, the SEC is now considering proxy access rules. Some have argued, in fact, I believe there was a court case, I don't know the name of it offhand, that said the SEC would not have power to do this without legislative authority. It's unclear.
Yeah.
There may be two conflicting cases. I don't know what the situation is, but it's unclear whether the SEC would have the authority to do this on its own. This says you have the authority. The original base language said they had the authority to do whatever they wanted. We got some blowback on our side, from both sides of the aisle, people who said, Senator Bayh, Senator Warner, people like that, who said they wanted at least some limit, so the SEC couldn't say 1 share is enough to give you proxy access, or 0.001% is enough to give you proxy access. That seemed reasonable. Senator Dodd's view was 5%. I thought that was too high, and so did most of the investor community. As I said, most of the investor community, not all. I know CalPERS would like 1%, but most of the investor community believes 3 and 3 is a pretty good compromise.
And if I could ask further, so your selling point would be that for those people who don't even think proxy access ought to be in the bill at all, that this at least establishes a minimum amount. It doesn't say maximum, minimum amount of ownership
Correct.
and longevity that have to take place.
Correct.
And so even if you don't support proxy access, you would say this is an improvement.
This is in between what was in the base bill and Senator Dodd's offer of 5 and 2. I don't know what's before us now. Is it the base bill, or is it the 5 and 2, or are we de novo? Or Base bill. So yes, you are right, Senator Corker.
I believe my colleagues have had a chance. The Schumer amendment is in front of you. I've had a chance to look at it. First, I want to commend my colleague from New York. I know he's worked hard on this and talked to a lot of people and to try and come up. And again, this is one of these issues where, again, if you went around the table here, I suspect each and every one of us might have come up with a different number, both in terms of the percent as well as the whole periods, or maybe none at all. And obviously, as a conference, we have to try and come to some conclusion on these issues that will allow us to move forward. This has been an issue. It's an outstanding one. Senator Schumer's done a lot of work on this. Others had. We had a lot of discussions about this in our own various meetings over the last year and a half or so on the subject matter. So, Senator Schumer, I want to thank you for your efforts in this regard. And let me ask my colleagues, unless there's any further debate on this, I'd ask that we support this amendment. All those in any further debate on this? All those in favor of the Schumer amendment will say aye.
Aye.
Aye. Those opposed, no. The ayes appear to have it, and the ayes have it, and we submit the Schumer amendment on proxy access.
All right, Mr. Chairman, let me begin the response. I'm going to call on the gentleman from California. I am not in favor of it. I have a question, and I'd be glad if I could answer. It says, and I will say my colleague from Alabama raised a similar question. On page 2, it says,
I don't even have it.
Require any shareholder or group of shareholders that submits a nomination for an individual who is elected to hold shares for a fixed period of time. How do you enforce that? If someone has an illness in the family and wants to sell the shares, they can't do it? Or alternatively, if they sell the shares, is the person that they were elected then recalled? I am very puzzled as to how you require people to hold shares, and what's the remedy if they do? If the individual dies, I assume that terminates it. Can the estate sell the shares? So I would yield to a senator who would explain to me what's the enforcement mechanism on having to hold the shares.
And if I could further comment before the senator responds, you're requiring them, as a shareholder, I think they have a right to make a nomination. I would think that's a right given under state corporate law. But you're actually conditioning them on holding the shares for 3 years. And I'm not sure that that's constitutional.
Okay.
And maybe I failed to follow this.
It was my time. I'll yield to any senator who would respond seriously. I don't know what the enforcement.
Let me just say this, and I asked the same question. The tail, you're talking about the tail here, was proposed by one of my colleagues, Senator Bai. First, we leave it up to the SEC to set up rules, okay, how to do it. Obviously, somebody dies, it's not going to apply or whatever. But there are all kinds of constructive trusts and other kinds of legal mechanisms where I know that shareholders and contractors bind one another to hold things for a period of time or suffer a certain penalty. And I suppose that would be the case here if you entered in. But we leave it up to the SEC to come up with the rules.
Well, I would say I find that deeply troubling. If we believe that people have a right to do it, and I would say this, especially since I don't like this amendment, the terms, but if they've had to have held it for 3 years, et cetera, they may have nominated several directors. Most of them may have lost. They may have some fundamental disagreements. I think compulsory share owning, I know we want to have people own shares in America, but the sentencing people to own shares seems to me an odd concept. Not really. So I would say I will predict, at the very least for my colleague from Alabama, that we're going to send it back to you without the tail, as the gentleman calls it, and that seems to me an appropriate characterization of it in some ways. We also have some other objections, and I will now recognize a member on the Republican side and then the gentlewoman from California. Do we have a vote?
Can I just say one other thing to my colleague?
Yes.
You can't require someone to hold shares. But if you want your shares to be counted, this is just theoretical, again, because we leave it up to the SEC. And I understand my friend's concern about this. When this idea was brought to me, I asked the same questions. You can certainly have some kind of contractual relationship that says if you want your shares to be counted to the 3%.
Well, I would say to the gentleman, yes.
And if you win, if I just could finish, if you want your shares to be counted to the 3%.
All right, I understand, but it's my time. Let me just say this. I understand
You've got to hold them or you get a penalty.
We have to go vote. I would say this. Yes, but there is a difference between what private contracting parties can do and what the government of the United States ought to do. If you want to bind yourself voluntarily with another private contracting party, that's one thing. To be ordered by the federal government to hold shares is going for...
You bind yourself.
I'm sorry, the gentleman, it's my time, and we have to go vote. No, you are bound. This is a rule of the SEC. You would be required by the SEC to hold the shares. We're going to go vote and come back and continue the debate.
Mr. Chairman, I think it's a great issue that they both have brought up. Candidly, a lot of times these entities are activists. The company doesn't want them around anyway. They want them out of there as quickly as possible. So I think it's a nice gesture that probably is a little too cool, and we probably ought to drop it.
Yeah. Well, you want to ask him that, why don't you? We'll try and find that out during the break. Do we know how many votes are in the House? 2?
Could I respond just by saying it may be a good idea. I don't think it's constitutional. That was my concern.
You know, just to answer my colleague, first, and to answer Barney, it's not a requirement. It's not the government requiring you. The SEC would say, in its private decision, if you want your shares to count towards the 3%, you have to sign something that says this. You don't have to do it, but your shares won't count to the 3%. As far as I'm concerned, I mean, this was not part of my original proposal. I think it's an interesting proposal. If the House should reject it, they reject it.
Oh, I mean, I think it's interesting. I see the motivation behind it. I think that it would address problems. I simply think it's unconstitutional.
Yeah, but it's not requirement, and so I don't think it's unconstitutional.
Well, it's a requirement if you're going to make a nomination, right?
No, it's a requirement
if your shares
you want to be counted. No, you can still vote your share anytime you want. This proxy access gives a group of shareholders, 3% to wit, the ability to get special access to the shareholder lists, which they don't have now. And to be considered for that special privilege, you'd have to say, if we win, I promise to hold my shares. It's not I don't think it's unconstitutional at all. I know it sounds it on its face, but when you think it through, it's not.
Thank you.
Let me, if I can, I know that the House is on the way over to vote, but since some of the staff are here, can I make a suggestion that if the House would take a look at the Schumer proposal, and I'm getting a feel, obviously, that at the very least the tail isn't going to come back, but if they'd respond to the proxy access, we've gone back and forth on this. We need to find a common ground fairly quickly. Again, it's one of these issues that we could all come up with different formulations to it, but we need an answer. So I'd urge the House, in looking at this, to come back as soon as you can with a proposal that might fall somewhere in between what you submitted earlier, what we've sent back, so we can come to some answer on this and put it in the committee conference report.
Chairman?
Senator Shelby.
Chairman, while the House has gone to vote, could you give the Senate members kind of a status check on where we are at this time? It's nearly 7 o'clock.
Yes, it is, and I would say, again, I want to thank my colleagues and thank our staffs and others. You've been extremely patient, but I think Congressman Frank and our intention is to keep working this evening. Good. We have to try and complete this. I apologize, but there's not a person in this room that doesn't understand the constraints we're operating under to try and get this bill done, if we can, before the 4th of July break, the end of next week. And so, while it's not my choice, in a sense, we've spent a lot of time over the last 2 weeks. We've covered an awful lot of ground. There are a couple of critical issues that need to be addressed. The VOCA rule we talked about, we're proceeding on that. The 716 issues, I know also there's a lot of interest in that subject matter. We've got to try and answer it. We've worked hard. I know our staffs, both the Agriculture Committee, the Banking Committee, to try and come up with a common answer on this going forward. and we'd like to get to that as soon as we can. I mentioned the proxy access issue, which we're now moving on. That's one of the outstanding questions. There are a number of other issues here, but if we can deal with the larger issues, then my hope is that sometime late this evening or early in the morning we can complete our work. Again, I apologize to my colleagues, and I may be missing some things. I'm not identifying every issue, but those are the large outstanding issues that require work. I've laid down some ideas, because if you don't lay down something, nothing gets done. You've got to start the debate somehow. So I know these various proposals have already attracted some rather vociferous responses, but that's the nature of the job of the chairman. I got to start the ball rolling somewhere, and my hope is we'll find some common ground on these issues to be able to complete a process. So that's sort of where we are. I say to my good friend from Alabama, and again, apologize on the length of time we're taking.
Mr. Chairman, we got a little time. I thought the media, there are a lot of them here, would host us all for dinner as we continue to work. Didn't you?
Well, let's take a vote on that. I think we might get unanimous vote on that.
Here, don't let them vote.
Well, the media can't vote. We just...
No, thank you.
Mr. Chairman?
Senator Crapo.
Mr. Chairman, while we do have a minute, I know that it probably won't ever come up in another formal vote, but as you will recall, I brought an amendment to deal with the privacy issue in terms of the investigation and operation of the new Consumer Protection Bureau. And we have been working on that behind the scene here between your staff and mine, and we have put together a pretty good solution, I think. And I wanted to thank you for working with us on that. My understanding is that it's going to be deemed a technical change or something like that, and that we won't actually have an amendment that will be voted on. But I did want to publicly thank you for working with me on that, because I do believe we got to a good resolution there that will much better protect the privacy interests of consumers as the new agency begins its operations.
Well, let me thank Senator Crapo and his staff, too, for that. This was an issue that was raised by Senator Enzi of Wyoming on the floor of the Senate. It was a good issue to raise, because obviously all of us in all of these things were very conscious, again, with the efforts that are underway without any legislation to have access to people's private information is an ongoing problem. And I want to thank you and our staffs for the work they did to guarantee, to the maximum extent we can, obviously, that privacy of individuals and persons will be protected. So I thank the senator from Idaho.
Well, thank you, Mr. Chairman. And the objective, which I hope we have achieved, is that the new agency will not have access to private financial information of consumers. I mean, and I just really want the record to reflect that. I think we had got there in the language, but I really want to make it clear that that was our intent, was to make it so that this new agency cannot be reaching down in and drilling down in and obtaining private financial information on specific individual consumers.
I thank my colleague for that. And pending some particular proposal, we have anything else to debate among ourselves here at this juncture? Maybe we'll take a little recess here for a few minutes.
Mr. Chairman, can I just ask the chairman a question?
Certainly, yeah.
I understand the chairman has received sort of a directive to get this bill done, and you want to do it. I mean, you've been living with this for quite a while. But we're about to embark on probably the two most complicated sections of this bill, and certainly two of the sections which have the most far-reaching impact on the credit capacity of this nation and on our competitiveness internationally in how the VOCA rule is structured. And in fact, I looked at the language you passed out, and I don't even think it's the VOCA rule anymore. It seems to have gone well beyond that. And as it brings in non-financial institutions, and how the derivatives language is structured. And to do this between now and 1 or 2 in the morning, it seems to me almost to invite that we're going to produce a bill that could easily have massive unintended consequences on this language, because, for example, the VOCA language we've just seen and just the immediate first impression is that it's really not the VOCA language. VOCA said insured deposits, and now it brings in non-insured depository institutions. And, of course, this whole debate over how we end up with derivatives is going to be very complex, and as amendments are adopted or not adopted, the implications really need to be simmered a little bit to understand them. So I would just hope that we would, And I'm not sure where the House is. I read press reports that the New York delegation from the House is concerned about the derivatives language and may be resistant to the 716 language. I don't know whether that's true or not. It's just press statements. So, I'm perfectly willing to stay here. I will stay here. If the chairman wants us here, I'll stay here. But I obviously think that these two issues are so critical in the area of trying to get them as right as we can that to take them up in this rather precipitous way under this artificial time frame is, I think, going to almost guarantee we end up with something that's really creates unintended consequences, which could be quite harmful to us as an economy.
Well, I appreciate my colleague. Again, these are first of all, they're issues that have been not exhaustively, obviously, but extensively debated, discussed over the last number of months. There's been a lot of conversation about them. Obviously, we haven't resolved them, and I understand that point. And if my preference were such, I'd prefer that maybe at a different hour of the day we might have time to do them and talk about them. But we are where we are in these matters, and I've got to try. The alternative is we spend all weekend here and work, because this has to get done. Now, of course, we do that. Then, of course, the whole issue is whether or not we have an extended time into the 4th of July break to finish the bill. I don't envision or like the idea of those December 24th votes at 7 a.m. in the morning to get something done. But this matter is so important that my urging would be to stay and get the work done, even if it infringes upon what otherwise would be a holiday time, because it's that important. And I am worried about these matters. If they get extended over various times, you're back here and the list gets longer rather than shorter. On these matters, we've all been in those situations before where that has happened. So my hope is here when the House returns that we can fairly quickly begin a debate and discussion on these two matters, and hopefully over the next number of hours come to a resolution on them. So I appreciate the point, and it's not without merit. I'll be the last to say so. But it's also a situation where we've got to try and complete this bill. We've been at it for a long time. The clock is not in our favor on these matters, given where we are and the time of year we're in, an election year we're in, all the time that's been spent. We spent 4 weeks on the floor of the United States Senate with this issue, weeks debating it, and so we are where we are. But I appreciate the point. I see my friend from Tennessee, and
yeah, I want to ask a related question, and certainly I'll like Senator Gregg and others, I'll stay however long it takes to get this right. I asked the chairman of the conference a process question this morning, and I think he may have taken it wrong way. As clever as he is, I never thought he'd try to pass an amendment while I went to the gentleman's room. I wasn't in any way indicating he might do that, and know that he wouldn't. What I was really asking is, when we finish this, and I think it speaks to the question Senator Gregg is raising, we are going through this, and this is a good process. I want to say one more time, and I appreciate Senator from Connecticut trying to make sure we have a good process. When it's all said and done, though, it's my assumption that this is the bill, meaning what we've actually done here is the bill. There won't be, after the fact, some big cleanup title that has anything else in it. It's on, but it does speak to what Senator Gregg is saying. That means that we have to get it exactly right. And I think that if I see the nodding from the Senator, our chairman here, what you're saying is absolutely nothing else is going to be added to this bill other than what we've agreed to in this room.
No, well, except that with the boilerplate stuff you do on conforming and technical amendments, which is boilerplate stuff in any conference. But
absolutely technical only. So that means we have to get the work.
No, not substantive. No,
no substantive.
No.
Perfect. That's good. So that means we really do have to get it right over the next day or two.
Yes, we do. Yeah, and again, we all have obligations. We all have other matters we're working on. This is hard work. And I know this is people looking at this, but take a good look at the room. It's democracy, and the American public is watching it. And as was it Bismarck or who the admonition about?
If you could clarify that when everybody's in the room, I would deeply appreciate that when the chair on the other side is here.
Certainly. Senator Shelby.
Senator Corky, you raise a good point, but our staff, the Republican staff, and their staff, at the end of the day, when this bill is gone, they're going to be watching this bill and under the Corbin rule, they have to have conforming and technical changes. But as far as any substantive change, you're absolutely right. I don't believe there will be, there can't be a substantive change once we vote on this. And that's right.
That's correct.
And he wants to.
No, that's correct.
Because
That is correct. And again, I'll make this suggestion, unless anyone wants to be heard on any other matter, we take a few minutes of a recess, and as soon as the House comes back, we'll try and move along again. And I can't begin to thank my colleagues for their patience in all of this. As I say, there are moments and gaps in here and pauses as we try to work on language and try to get the language right and accommodate our colleagues and whenever I can in this as well. Take a recess till the House returns.